Alright, just a quick video on how we identify our levels of supply and demand. So we have 4 types here: drop base rally, rally base drop, rally base rally, and drop base drop. What this means is that I'm looking for these basing areas, because what that suggests is that there is an imbalance in this basing area, because for price to rally, trade sideways, and then explode out of this origin of the imbalance, you obviously have an excess, or you obviously have more demand than supply here. So what that means is that you have so many buy orders in this area that price exploded out of it, that basically the big boys didn't have time to fill their buy orders. So usually you'll get manipulation lower into the imbalance, which is usually how we enter and exit trades, and then you'll see a strong reaction from there. So if we look at that in real-time action, I'll show you, a couple of other trades that we took before, but this right here, this is a short we took. Why? Because it's rally base drop, right? Price rallies, bases, and drops, and it also took out previous lows. So obviously you have an excess amount of supply here, and you can see we are making lower highs. So what that means is that we have supply being respected in a downtrend, and then we have demand being violated. So we have demand being broken, supply being respected. So we want to draw it from the body of the basing candles. So you can either go from the body of the basing candles here or the wick. But we just want to capture this area, because this obviously is where the supply is. Because look at this, price was falling, it sort of stalled here, bounced, and then you get this vicious drop. So this really would be the origin, right? So we draw it from the body of the basing candles, and then this actually was a short that we took. I forget when, but you can see that. So we want to look left and then trade the white space on the right. So what that means is we want to zoom out, and we want to look for levels that are untested. So at the time, this was an untested level, right? This was the first test of the level of supply, and you can see that we faded, right? And what we do is, for targets, we want to look for opposing levels. So from the 4 structures above I just showed you guys, this right here is a rally base rally demand zone. But we do know that in a downtrend, we do know that demand is being violated, so and broken. So it's still a good target. It can bounce, sure, it's counter trend worthy, but we need to understand that we are in a downtrend and making lower highs. So you can see here that this is a textbook rally based rally demand zone right there, because you can see that we rallied, price stalled, and then you get a bounce. So look what happens when we get this rejection out of supply here, right? Price rejects supply here, and it fades to demand. It's this rally based rally demand zone right there. And you can see that it bounced a couple times and then finally took off, but you can see that price still failed to make price failed to make a higher high. So the trend is being respected. So on this bounce here, what we want to do is, this is just basically how we have been trading, is we want to look to short levels of supply. And if we really want to look for counter trend bounces, we can, but obviously we want to try to stick with the trend. So now that we see that this level has been tested of supply, we can see that new levels of supply form, right? So I'm gonna erase this level, and this was another short that we took the other day. Okay, so this right here, here's another imbalance. So if you guys go on my website, I actually will explain how to draw them, because it can become very subjective, but there is a very particular structure that I'm looking for. Engulfings are basically where I make my money at. The engulfings near key pivots are very powerful. They suggest where you have very illiquid levels. So this right here, this was another short we took. It's a textbook level of supply. You get the huge bearish engulfing. So what we do is we draw it from the body of the basing candles right here. And this was another short that we took earlier in the week. But so what happened is I identify the level of supply, right? This is a rally based drop, right? Because we can see here that price You can see here that from this peak, we faded, price bounced, tried to find some buyers, and made a lower high, aka trend is intact. So we get the rally base drop, right? And that's right there. So that's how we get the rally base drop. I'm just showing you guys a smaller time frame because it's kind of hard to see on a 4 hour, but I'm just showing you the structure. But this is a rally base drop supply zone. So we identify it and we draw it out and we extend it out to the right. And whenever we did enter shorts, we waited. We didn't try to catch this move down. We just simply waited for price to enter the fresh level of supply here. And then you can see that the reaction was gorgeous. Testing the fresh supply and boom. Huge dump. Huge dump. And then this is another drop base rally. Right, drop base rally demand zone. We draw it either from the body or the wick highs. So again, if you go on my website, I will actually show you the precise way that I draw them. But from the most recent open of the bearish candle prior to the rally, we extend it out here, and you can see that this imbalance actually tagged to the tick right here. This is a rally base drop demand zone that tagged. And the short from this morning, actually, another textbook reaction. You see, so these levels are just constantly forming, guys. The thing that most fail to really understand is that these levels aren't foolproof. But in order to really stack the odds in our favor, we need to really look at the broader picture and then just notice that we are, in fact, in range bound, right? You see, we are contained within range, so we have to simply play the levels for now. But we are making lower highs, obviously, and we do have supply being respected. So from this morning, right, we identified our level of supply, which is right here. Rally base drop. So obviously for price to fade here, find buyers. So it found some buyers here at demand. So this is demand. It's not a very strong structure because look where it is relative to the recent pivot low. But it is demand and it did cause a bounce. But of course it got viciously sold into, right? So what happens is it forms this rally base drop supply zone or another imbalance. So again, we draw our level, rally base drop. So we're looking for the body of the base and candle, rally base drop. So obviously this would be the imbalance right here. We draw it from the body of the base and candles, extend it up to the wicks. Most of the time, a strong zone will never really penetrate deep into the level. That's why numerous times you'll actually see that we can actually nail a higher low literally to the handle. You don't want to give yourself some wiggle room, but you can see here, remember, we didn't chase this drop. We caught part of the drop. We actually got the relief bounce right into supply, and that's our cue to enter shorts from this morning. And then you get the test into the level, and then a beautiful sell for about 280 points. So now what we want to do is, obviously we haven't traded here yet, but this is another level of demand here that can bounce, potentially, if we get into it. So we identify our levels and whatnot. So this was the target right here, this buy zone here, which is fresh and it does likely bounce, but we do need to know that supply is being respected. And like I said, guys, so in this chop range, we're just trading this range for now, which I do think it's setting up like a triangle. I think we're forming some sort of triangle. It's too choppy and the subwaves are on 3, so I think we're going to do like an A, B, C, D, E. And then this is just sort of what I'm leaning towards if the $15,260 high is not taken out. But I couple Elliott wave theory with our supply and demand imbalances, because that really, Elliott wave will lay out the path, and our supply and demand levels will give us the entry exits. So going back in terms of supply and demand, we want to zoom out and we want to look left, meaning we want to identify these levels, look left, and then trade the white space to the right. So what that means is you can find these structures all over. Rally, base, drop, right? Here, rally, base, drop. Here, rally, base, drop. You know, and what we want to do is, these are actually areas in the future that will trade, but they give us sort of what we can, or where we can expect pullbacks to happen. So this right here, guys, rally, base, drop. See, this is a fresh level of supply. And so is this right here, guys, rally, base, drop. And I'm going to go over in a second what I mean when I say fresh. Rally, base, drop. So we, like the way I taught you guys, body the base and candles. Let's go here to here. And then we extend our levels out. Extend our levels out. And you can see it's fresh. Why is it fresh? Because you can see that if we extend the levels out to the right, you can see that price has never really touched any of these levels. So the idea is that whenever the market does bottom and things do start to go up, we can expect pullbacks out of these levels. And we can identify these levels on literally every single time frame. For example, I'm going to go on the Qs from yesterday. Okay, so this is what I mean when I say that this is really why retail always gets bagged. It's crazy, but naive retail traders, they are comfortable with buying, for example, a gap up into all-time highs, but when things are at discount, they actually get scared to make a move. So in this scenario here, yesterday we have retail traders buying a gap up. Keep in mind that we are in a downtrend making lower highs. They're buying a gap up into a level of supply. So what we do is, this is what we posted in our private feed, but we identify the level. So this is a drop, base, sideways, drop, base, drop. So you see how price tanks from here, and then we sort of chop sideways here, and then we fade again, right? So the origin of the supply isn't down here. No, that wouldn't make any sense. The origin is actually in the body of these base and candles, right? This is drop, base, drop. If we go back to our NQ chart and I show you guys the structure, which is right here. Okay, drop, base, drop. This is literally what we just saw right there. There's the base and candles. We faded, and then you get the gap up into supply because you have retail traders, novice trader, buying after a gap up into a level where they're selling. And what happens is originally price takes off too fast for the smart money to fill their sell orders, so you get manipulation back up into the level of supply. And what happens is when the imbalance tags those orders that didn't originally fill, they start hitting the market, because on the gap up you have retail traders who are saying, oh, you know what, price gapped up, let's get long. Well, guess what? Who's selling to them as they're buying? Smart money does not buy after a big move in price, right? They're going to actually capitalize on that, like on that psychological flaw, because they're going to be selling as retail traders buy into supply. And then what happens is, for today, you get this beautiful sell. And again, I teach how to actually draw these, but you know, I look for engulfs, and then I look for bullish candles, and you know, this was the exact same level we took right here. 356 was our level, was our level of supply. and you could see exactly what happened. Drop, base, drop. Price tagged this or rallied. Well, yesterday gapped up, ran right into supply here. Boom, and then you get this just gorgeous short that we got right here, and a nice fade for almost $6. So here's another example of another fresh level right here. So if price were to fade into this level of demand, drop base rally, well, it's more than likely we get a bounce out of this level of demand. It's fresh. Drop base rally. It's fresh. And again, this is another short that we took. You know, you can find these. I mean, you can find these levels on the 1 minute, 30-second chart. I mean, you can find them on every single time frame. But if you actually say it out loud, it'll help you identify it easier. But right here, you can see how price tanked, found some buyers or a little relief rally, and it rallied up, right? But look what happened when it rallied. You get it just got destroyed. So this would form an imbalance, right? Rally base drop. This is rally base drop supply zone. Again, we have our special way on how we draw the levels, body the base in candles, and you could see the reaction. Here is a test into the fresh level of supply, and it tanks. And as it goes down, you can see it formed another level of supply right here. That supply there, and then you can see that supply tag there again as we make lower highs. But that's just sort of what we want to look for, guys. I mean, here's another level of supply right here. Look, rally, base, drop. This is a level of supply right here. So when we have these levels, they actually represent where you have big money buying, selling at. So when you have these types of levels, you have an idea of where things can move, where things can go to, because these are imbalances in the market and they tend to act as a magnet to price. So again, guys, these are the four structures right here. These are the four structures right here. Learn to spot them. They will make you a lot of money and they will save you a lot of money. And it'll just give you very unbiased ways to project future direction of the market. So when you pair this with, for example, what I use, Elliott wave, it becomes very powerful because you know the projected path that price can go to, and you know where to look for shorts on relief bounces, or you know when to look for pullbacks to catch the next leg up on an impulsive move.